The Forex market or FX market operates by way of currency pairs. Think of it as comparing the value of one currency against that of another in the form of a quotation. In each currency pair, regardless of the currencies involved, there's a base currency and a quote currency, or sometimes referred to as a secondary or counter currency. The base currency is always on the left-hand side of the quotation, while the quote currency is on the right side. It's important to understand that the base currency always represents one unit of currency, while the quote currency represents the amount required to purchase one unit of base currency. Imagine euro-dollar trades at $1.20. This means to purchase €1, it'll cost $1.20. The base currency in this case is €1, and the quote currency is $1.20. When entering long a currency pair, you essentially buy the base currency and sell the quote currency. And conversely, when selling a currency pair, you effectively sell the base currency and buy the quote. Ultimately, currency pairs are organized into three groups: majors, minors, and exotics. Major currency pairs are those that contain the most heavily traded currencies, so think euro-dollar, pound-dollar, and dollar-yen. And the majors always contain the US dollar. Minor currency pairs, or sometimes referred to as cross-currency pairs, are those not associated with the US dollar. Popular minors are the pound-yen, the euro-pound, Aussie-yen, and euro-Aussie dollar. Exotic currency pairs, on the other hand, include a major currency that's paired alongside currencies that can be relatively thin markets. Exotic currencies are those typically associated with developing or emerging countries. Common exotics are the Japanese yen against the Swedish krona and the New Zealand dollar against the Singaporean dollar. So, which pairs should you trade? Aside from trading experience and the trading style employed, volatility as well as liquidity is likely to be a deciding factor. Of course, you will also need to take into account the time of day. A currency pair tends to work with increased liquidity when its financial centre is active. For example, pound-based currency pairs are usually most active during the London session.